Education tech company Coursera reporting earnings yesterday after the bell, beating on both lines. Revenue up 19% year over year. Guidance was mixed. Its enterprise and degree segment facing some pressure from tightening budgets and this strong labor market that we got the numbers on this morning. Stocks saw an initial pop. The move turned negative in today's session. Let's bring in Coursera CEO Jeff Maggioncalda. Jeff, good to see you. So give me the sense of trajectory here. You were last on talking about executive courses for AI, but for the bulk of the students in Coursera and the universities who potentially signing on to the platform, how do things look?
Things are looking good. I think that we, as you said, strong growth in 2023. We finished the year, revenue up 21%, Q4 year on year up 19%. We did, for the first time in 12 years, post a positive adjusted EBITDA quarter on profitability in Q4. So that looks great. Particular strength in the consumer segment, as you're saying. I think people are starting to realize that there's a lot of change afoot with generative AI and other things that are happening in the labor market. And if they can get access to these professional certificates, which are driving our consumer segment, it really helps advance careers in a pretty dynamic labor market.
Jeff, how are you seeing the still tight but loosening labor market affect corporate demand for training and maybe even for retraining? Because even though the job market is relatively strong, there's still the sense that some businesses have workers in areas where perhaps they need fewer and need workers in areas where they don't have the trained people.
Yeah, you put your finger on it. It's going to be a real mix. I think companies are definitely thinking we're going to have to reskill the employees who are with us today and will be with us in the future. Many companies, I think, are anticipating, like Laura said on your last segment, that generative AI will impact a lot of jobs. What we're excited to do is be able to serve companies who need to reskill people with the Generative AI Academy, like how do you do your job differently? And then frankly, for people who need to transition into new careers, a lot of education is going to go along with that. So we do think that generative AI is going to create a real demand for skilling and training from institutionals and individuals as well.
Are you already seeing that take place? There's been a lot of talk about the potential disruption and displacement of the labor market as Gen AI rolls out in a bigger, more meaningful way. Is it already happening? Are you already seeing it in your numbers?
I think we're starting to see it a bit in our consumer segment. We had 1 enrollment per minute in generative AI content on Coursera. The enrollments in generative AI content in January of this year are 4.5 times what they were in June of 2023. But you know, when we hear our companies and you look at a lot of the reports that are out there, I said last night on the call, I kind of see this in phases. Phase 1 is kind of conversation. Everyone's talking about ChatGPT. Phase 2 is experimentation, a little tire kicking, people feeling good if they're doing something. But I think the next phase is going to be separation. I think the leaders who really understand how to take advantage of this for better value for customers and for productivity for the team, they're going to separate. And then that's going to create a scramble for other companies to try to catch up.
Yeah, I think we're going to talk more about that later in the show. But I want to go back to the positive EBITDA. That's a big deal. But under the covers of that, how are you managing costs during this period when it comes to hiring, when it comes to percentage going to SG&A, and particularly marketing? Because it seems like you might be growing your spend there a bit.
Yeah, we're spending more dollars on marketing, but we're seeing, especially on these professional certificates, pretty good efficiency on the spend. So the growth that we're creating from that spend is more than offsetting the spend. So we're getting good leverage on the marketing dollars. I think that keeps, as a percentage of revenue, it keeps our paid marketing looking pretty good. We're getting good leverage on G&A, as you'd expect. And on R&D, we're seeing increasing leverage. I mean, we are a company mostly delivering low marginal cost services with technology and content. So we expected to reach some scale where we become profitable and start generating good free cash flow. And now we're at that point. And as we guided towards 2024, we're looking for positive adjusted EBITDA and more than that amount of free cash flow in 2024.